Hi guys, this is not financial advice. This is just sharing what I've chosen to do in my life. 4 years ago, I took all of my money out of the banking system and I put it into gold. I told you all I was going to do it. In the last 4 years, I've doubled my worth by taking it out of the banking system and putting it into gold. I told you 6 weeks ago that now is the time to look at silver. I transferred a significant amount of my wealth from gold into silver. I have doubled that in the last 6 weeks. It's gone up by 150% in 1 year. Gold and silver are the safe places to have your money. The banks are not. Don't just sit there and do nothing. The link is down below as to where you should be looking. Use common sense and use wisdom. Gold and silver are safer than banks and institutions right now.
If you thought the last Black Monday was chaotic, you have seen nothing yet. History teaches us that financial collapses happen in waves. The first wave, the one we saw last week when silver hit $75 and trading was halted, was the tremor. Tonight, as the Asian markets prepare to open for the first full trading week of 2026, we are staring down the barrel of the earthquake. We are calling this Black Monday 2.0. The leverage in the system has not been flushed out. It has compounded. The banks didn't cover their shorts. They doubled down. And the physical shortage hasn't been solved. It has worsened. The data suggests that when the clock strikes midnight, we're going to see a gap-up event that will make the previous moves look like a warm-up. The target is no longer $85. The target is the psychological barrier of $100. And once that breaks, the dollar as we know it is finished. Why tonight? Because the global financial system is currently held together by duct tape and promises. Over the weekend, while Western markets were closed, the gray market for silver in Dubai and Singapore continued to trade. Reports indicate that private transactions are already clearing at over $100 per ounce. This creates a massive kinetic energy that is waiting to be released onto the official COMEX market the moment it opens. The spot price has to catch up to reality. We are predicting a violent repricing event in the first 15 minutes of trading. The algorithms are set to buy. The sellers have left the building. We are facing a liquidity singularity, where the price can go anywhere because there is zero resistance to the upside. JP Morgan and the bullion banks are entering this week in a state of terminal insolvency. They managed to survive the last squeeze by halting trading and changing the margin rules, as we exposed, but you can only change the rules so many times before the players flip the table. They are currently short hundreds of millions of ounces of silver against a physical inventory that is effectively zero. At $100 silver, their liabilities exceed their assets by a factor of 3. This is not just a bad trade. This is an extinction-level event for the bank. They will throw everything they have at the market tonight, spoofing, naked shorts, media lies, but it won't be enough. You cannot print silver to cover physical delivery demand. They are bringing a knife to a nuclear war. The signal from the east is flashing red. The Shanghai Gold Exchange, SGE, has widened its premium over New York to a historic $18. This arbitrage gap is the engine of the squeeze. It guarantees that every ounce of silver mined in Mexico, Peru, or Australia is bypassing New York and heading straight to China. The West is being drained dry. Tonight, when Shanghai opens, we expect them to bid the price up aggressively to secure the last remaining stockpiles before the Western banks wake up. China is weaponizing the silver market to break the US dollar's hegemony. They are forcing the reset on their terms, not ours. Traders need to be prepared for another limit-up halt. The exchange rules state that if the price rises by a certain percentage, trading stops. We saw this last week. We will likely see it again tonight. But here's the danger. A halt doesn't stop the price from rising, it only stops you from buying. If the market locks limit up at $90 and the real price goes to $100 in the background, you are locked out. You cannot enter the trade. This is why we have been screaming to buy physical metal. When the digital market freezes, the physical market keeps moving. Black Monday 2.0 will likely be characterized by a market that is open for 5 minutes and closed for the rest of the day due to volatility. The most terrified people tonight are not the day traders, but the supply chain managers at Tesla, Apple, and Samsung. They realized over the weekend that they cannot secure silver for their 2026 production runs. The just-in-time inventory model has collapsed. We have intelligence that major tech companies are preparing to enter the spot market directly on Monday morning to buy whatever they can find, regardless of price. When a trillion-dollar company Panic buys a strategic resource, the price chart goes vertical. They are not buying to make a profit. They are buying to keep their factory doors open. This is inelastic demand, and it is the most powerful force in economics. The silver market is small, but it is the fuse on a much larger bomb, the derivatives market. The interest rate swaps and currency derivatives held by major banks are all interconnected. If JP Morgan fails on its silver book, it triggers a margin call on its other positions. This is called contagion. Black Monday 2.0 isn't just about silver, it's about the potential collapse of the entire $2 quadrillion paper derivative bubble. The spike in silver is the pin pricking the bubble. Watch the bond market tonight. If yields spike while silver rises, we are witnessing the start of a sovereign debt crisis. The psychology of the market has fundamentally changed since last week. The dip buyers are gone. The short sellers are terrified. The only participants left are the panic buyers. The fear of missing out, FOMO, has infected the retail public. Google searches for how to buy silver hit an all-time high this weekend. When the general public rushes into a tiny market like silver, the price discovery mechanism breaks. We are moving from the stealth phase of the bull market into the mania phase. In a mania, fundamentals don't matter, only possession matters. Usually, the banks use Sunday night to tamp down, smash, the price when volume is low. They tried this last night and it failed. Every time they sold paper, someone bought it. The floor has risen. The fact that they cannot push the price down even during illiquid hours proves that they have lost control. The beast is bleeding. The market smells blood. When a manipulation scheme fails, the price usually snaps back violently in the opposite direction. That snapback begins tonight. Why $100? Because $100 is the number that breaks the illusion. At $30 or $50, people think silver is a commodity. At $100, people realize silver is money. It is a psychological threshold. Once we cross $100, the mainstream media can no longer ignore it. They will be forced to cover the story. And when they cover it, millions more people will buy. $100 is the ignition point for the next leg higher to $200 or $300. It is the line in the sand between the old financial system and the new one. We must warn you again about force majeure. If the squeeze gets too violent this week, the COMEX may declare an emergency and settle contracts in cash. They will say, "We don't have the silver, here are some depreciating dollars instead." If you are holding paper silver or unallocated pool accounts, you are walking into a trap. Black Monday 2.0 might be the day the exchange admits it is empty. If that happens, the paper price goes to zero and the physical price goes to the moon. You must hold metal, not promises. A spike in silver often precedes a run on the banks. As people see the value of their currency collapsing against real assets, they lose faith in holding cash in a bank. We expect to see lines forming at banks and ATMs this week as the realization of inflation sets in. The silver run and the bank run are the same event. One is a flight to safety, the other is a flight from risk. Silver at $100 is the signal that the banking system is no longer safe. We are living through the greatest transfer of wealth in history. It is moving from those who trust the government to those who trust history. It is moving from paper to metal. Those who hold silver through this transition will become the new bankers. They will have the capital to buy up distressed assets, real estate, businesses, land, for pennies on the dollar when the dust settles. Black Monday 2.0 is the day the transfer accelerates from a stream to a river. Watch for a reaction from Washington. They will blame speculators. They will blame Russia. They will blame you. They might threaten windfall taxes or price controls, but they cannot print silver and politics cannot override physics. The more they try to control the price, the higher the black market price will go. We are entering a phase of financial repression where the government declares war on the free market to save its own power. If you call a dealer tomorrow morning when silver hits $100, do not expect them to sell to you. They will likely pull their inventory or charge a 50% premium. At a $100 spot, the physical price might be $150. We are entering the unobtainium zone. The window to exchange fiat currency for real money is closing. If you don't have it by the end of this week, you might never get it at an affordable price again. Silver is the volatile leader, but gold is the heavy artillery. As silver breaks out, it will pull gold past $3,000. This is a sector-wide reset. The ratio between gold and silver is tightening, which means silver is outperforming gold. This is classic end-of-cycle behavior. When silver leads, the move is explosive and usually signals the end of a currency regime. There are still traders betting against silver. They believe the banks will win again because they always do. These bears are about to be slaughtered. They are fighting a trend that is backed by physical shortages, geopolitical conflict, and monetary collapse. Betting against silver right now is like picking up pennies in front of a steamroller. The steamroller is moving at max speed tonight. This event sets the tone for the entire year of 2026. It will be a year of volatility, shortages, and resets. The stability of the past 40 years is gone. We are returning to a world where tangible value matters more than credit score. Black Monday 2.0 is the opening ceremony for the year of hard assets. So, what do? If you have silver, sit on your hands. Do not sell, do not trade, let the price come to you. If you don't have silver, you have a few hours left before the Asian Open creates chaos. Find a reputable dealer, lock in a price, and get it in your possession. Ignore the noise. Focus on the ounces. The chart is primed. The banks are trapped. The world is watching. Black Monday 2.0 is not a possibility. It is a probability bordering on certainty. The $100 reset starts tonight. The dollar dies a little more with every tick of the clock. Be brave. Be prepared. And watch the screen closely. The revolution will be digitized, televised, and monetized. We are about to witness the entry of the true Leviathans, the institutional investors. Until now, the silver market has been dominated by banks and retail stackers. But watch what happens when BlackRock, Vanguard, and the massive pension funds decide they need a 1% allocation to precious metals to hedge against the collapsing bond market. The global bond market is worth $130 trillion. The investable silver market is worth less than $100 billion. It is a mathematical mismatch of epic proportions. If even a fraction of 1% of institutional capital tries to squeeze through the door of the silver market on Monday, the price won't just double, it will reprice by orders of magnitude. The smart money is late to the party, and they will pay any price to get in. Paragraph 22. The Basel III endgame. There's a regulatory ticking time bomb that few are talking about called Basel III. These international banking standards are forcing banks to reclassify how they value gold and silver. Under the new rules, unallocated paper contracts are considered risky liabilities, while physical metal is considered a Tier 1 asset, risk-free. This forces the banks to dump their paper shorts and acquire physical metal to strengthen their balance sheets. The very regulations designed to save the banking system are acting as a catalyst for the silver squeeze. The banks are being forced by their own regulators to stop suppressing the price and start hoarding the metal. Paragraph 23, the Russian connection. While China drains the vaults, Russia is cutting off the supply. Russia is one of the world's top silver producers. In response to Western sanctions and the weaponization of the dollar, we expect the Kremlin to announce an export ban on strategic metals to unfriendly nations. If Russian silver is removed from the London and New York markets, the supply deficit goes from critical to fatal. Russia and China are coordinating a pincer movement to starve the West of the resources it needs to maintain its hegemony. The geopolitical chessboard has been set, and the West is in checkmate. Traders need to understand the fine print of the COMEX rulebook. There's a clause that allows the exchange to settle contracts in cash if physical delivery is impossible. This is the ultimate trap. You might hold a contract that says you own 5,000 ounces of silver, but when the default happens, they won't give you the metal. They will give you a check for the last traded paper price, let's say $85, while the real street price is $150. You will be made whole in nominal terms, but you will be destitute in real terms. This is why we say, if you don't hold it, you don't own it. You only own a claim on a bankrupt counterparty. Silver is not just money, it is energy. It is the most conductive metal on Earth. You cannot have a Green New Deal without it. As the price of oil rises due to war in the Middle East, the demand for solar energy explodes. But you cannot build solar panels without silver. We are entering a vicious cycle where the energy crisis drives up the demand for silver, and the silver shortage makes energy more expensive. The industrial consumers are about to panic bid the price to levels that will shock the financial world. They aren't buying to speculate, they are buying to keep the lights on. Hyperinflation is not just about money printing. It is about the velocity of money, how fast people spend it. When the public sees silver gapping up every day, they realize their dollars are melting ice cubes. They start spending their paychecks the moment they get them, buying tangible goods before prices rise further. This velocity creates a feedback loop that destroys the currency. Black Monday 2.0 is the psychological trigger that pushes the velocity of money into the danger zone. The stampede out of cash and into assets has begun. The tragedy of this reset is the obliteration of the middle class. The wealthy own assets, the poor own debt. But the middle class owns savings denominated in currency. As the dollar collapses against silver, the life savings of millions of families are being vaporized in purchasing power terms. This is the greatest theft in history, perpetrated by central banks via inflation. By holding silver, you're opting out of this theft. You're building an ark to carry your family's wealth through the flood. As the banking system freezes and digital controls tighten, a parallel economy is emerging. We are seeing communities where silver coins are being used for trade, paying the plumber, buying farm-fresh meat, settling debts privately. This black market economy operates outside the surveillance of the IRS and the banking system. Silver is the currency of this free market. As the official system becomes more tyrannical, the premium on privacy money, silver, will skyrocket. The black market price will become the real price. Be warned. Before the final explosion to $100 and beyond, the banks might try one last desperate shakeout. They might dump their remaining inventory to crash the price temporarily, hoping to trigger stop losses and scare you out of your position. This is known as a bear trap. Do not fall for it. Any dip at this stage is artificial. It is a gift. If the price drops on Monday morning, it is not because silver is worth less. It is because a desperate bank is trying to survive for one more hour. Buy the dip. Break the bank. Yes. Generations from now, students of economics will study Black Monday 2.0. They will look at the charts and see the vertical line where the fiat currency era ended and the resource era began. They will ask, why didn't people see it coming? The answer is that the signs were everywhere, but only a few were looking. You are one of the few. The research is done. The warning has been sounded. The market is opening. The rest is up to you. Secure your future. Watch the gap.
Noble Gold. Real assets. Real value.